You're entering CNBC TV 18's virus-free studio, powered by Century Laminates and Century Ply.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. But let's first take it to the top headlines at this hour. Markets start in the green on global cues today but fall sharply on reports of fresh Chinese army movements on the Indo-China border. And Sensex and Nifty down 0.5%. Mid-caps take it on the chin and the index down over 2%. The Nifty Bank underperforms as well.
In an over 24,000 crore deal, Reliance Retail is set to acquire the retail and related businesses of Future Group, a move that will help expand its reach across segments and allow the Future Group to address its debt challenges.
Adani Enterprises enters into an agreement with GVK Group to take over Mumbai International Airport and the Navi Mumbai Airport project. Meanwhile, CG Power gets its fight night after lenders approve Tube Investments' bid for taking over the beleaguered company.
Given the challenges posted by COVID, the Secretary of Department of Investment and Public Asset Management tells CNBC TV 18 that the ETF route will be shelved this year and the government will look to divest stakes in companies like BEML via the OFS route. Also says the 2 lakh crore divestment target may be missed.
So those were the top headlines at this hour. The market is the biggest headline at this hour at lunchtime because totally losing grip when it comes to the bulls in the market. Bears are in control and market really substantial cut seen from the highs of the day. Take a look at Nifty 50 Sensex and the bigger cut is coming in from the Bank Nifty, which is down over 2% in trade today. Advanced decline, it's a bleak picture. So market breadth really looking very weak right now, Sonia.
Absolutely. And you know what? Up until now, the run has been so strong in the market, right? I mean, the Bank Nifty is up 15% in the month of August. So I guess a tad bit of profit taking will not hurt anyone. So for now, it's just not a tad bit, but it's getting worse. So the Bank Nifty is now down about 700 odd points. Let's see which way it goes from here. But straight to the latest on the India-China standoff, army personnel say that the PLA troops carried out provocative military movements on the southern bank of Pangong Tso Lake. Parikshit has more details for all of us. Parikshit, over to you.
Over 2 months after the Galwan Valley clash on the 15th of June, when 20 Indian soldiers were killed and there were casualties on the Chinese side as well, we're now getting reports that there has been another incident at the LAC. The Indian Army telling us that there was a Chinese attempt to change the status quo at the LAC, violate the consensus that had been reached by the foreign ministers, the military officials and diplomats by making some movement at the southern bank of Pangong Tso Lake. We believe that the Chinese troops were trying to transgress this area further. This attempt was thwarted by Indian troops. The Indian Army has also bolstered its defenses in this area. The Indian Army saying that it's committed to maintaining peace and tranquility through dialogue, but is also determined to protect the territorial integrity of the country. A brigade commander level flag meeting is on currently at the Chushul area to diffuse tensions between the two sides. But clearly this standoff is not getting solved. Pangong Tso and Gogra Post had been contentious issues in talks between the two sides. Chinese have refused to budge from these areas. So it's going to be a complicated and difficult negotiation going forward. But for the moment, the priority is to diffuse tension on the ground.
Oh, yes, Parikshit, thanks so much for putting all that into perspective. And it's extremely important right now because markets at the lowest point of the day, over 1% down on both Sensex as well as Nifty. So enter the dragon clearly. But another possible reason for the market sell-off could be the margin pledging changes, which will be effective from tomorrow. And Prashant Nair is right here to explain all that to us. Prashant.
Thanks for that. There are actually 2 changes which are coming into effect from tomorrow. One is that there will be 20% upfront margins which brokers will have to collect from all clients in the cash segment. No problem with that. The system is ready. Margins were already being collected. Now it is flat 20%. Actually, SEBI relented and brokers are actually getting what they wanted. So that is no trouble at all. It's a second point which I think is under a fair bit of scrutiny and debate. This is the system of how you pledge securities. I mean, if you have, say, 1,000 shares or something, and you want to borrow against the value of those shares, you basically right now made off-market transfers to the broker, The broker basically got title over those shares or securities, and you could buy something against the value of the shares that you are pledging. The way this pledging is going to happen with the broker is changing from tomorrow, or at least that's how things stand right now. There is a meeting, by the way, underway right now. I mean, SEBI, depositories, broker associations, all are meeting. Brokers are basically telling SEBI that we are not ready. Depositories are not ready. And this is basically a market infrastructure issue. We don't have any fundamental issues with what is being proposed, but we just need more time to implement this. What is the problem? What are brokers pointing out? Brokers are basically saying that every client has a unique client code. This has to be available with the depository, linked to the exchange. And every client a particular client may have an account with different brokers. So this mapping has to be done at the depository level, which is still missing, and that will take some time. If you implement this from tomorrow, what may happen is that many clients may not be able to move from the current system of pledging to the new system of pledging. So give us more time to implement this. As I said, the meeting is on. We may see a postponement, or SEBI may say, well, no, this goes into effect tomorrow. Is this what we are seeing linked to the sell-off that we have seen right now? It's always a probable kind of an answer, and I would say it's probably yes. It is linked to the sell-off that we've seen, and the reason is very simple. If you have, and by the way, remember the backdrop for all of this is that the market positioning has been extremely one-way long. If you have, and clients basically have pledged securities with the broker to fund their outstanding positions out there, long positions out there, brokers are going to basically, or rather have been calling up clients today and saying, reduce your positions because the securities that you've pledged with me have to be under the new system, and that system is not ready as yet, which means the securities that you are pledging with me are no longer pledged. They are pledge free. So as a result of which, I cannot fund you to the extent of the value of those securities or the value of those shares, so reduce position. That is the link between what we've seen in the market today and what this new margin system pledging, which is under deliberation. As of now, it comes into effect tomorrow, unless, of course, we hear from SEBI saying otherwise. Back to you guys.
Okay, Prashant, thanks a lot for that. Well, moving on, the Ministry of Home Affairs has announced guidelines for Unlock 4. This phase will allow the opening up of several more activities outside the containment zones. The MHA has decided to allow Metro Rail to operate in a graded manner starting the 7th of September. A whole lot of other activities will also restart with effect from the 21st of September. But the most important thing for me is that states cannot undertake any lockdown in places that are outside the containment zone. And from a manufacturer's perspective, remember, this stop-and-start approach to manufacturing because of the arbitrary lockdowns in states was the big issue. But now that has been ironed out. Anshu joins in to take us through the list. Anshu.
That's right. The most important guideline is that states cannot impose lockdown outside containment zones without any prior consultation with the Ministry of Home Affairs. It has also reiterated that there should be no restriction in movement of interstate or intrastate for people or goods. Now, it has also said that there should be no separate permission, e-permit approval required for movement of goods or persons. Now, Metro Rail will start functioning from September 7th in a graded fashion, but cinema halls, entertainment parks, swimming pool and theatres will continue to be shut. It has also allowed social, academic, political, sports, entertainment, cultural functions with a ceiling of 100 people who can join in the function starting September 21st. Now, lockdown will continue strictly in containment zones till September 30th. Back to you.
All right, thanks, Anshu, for getting us those details. Another important macro data that we will be watching out for is the Q1 GDP numbers, and the first data in COVID period is scheduled to be released later this evening. So all eyes on that. Lata Venkatesh is here with all the expectations.
GDP for the first quarter is going to be announced. That is for the months of April, May, June. It's the first GDP number for the COVID period and therefore assumes a lot of importance. A CNBC TV 18 poll indicated that GDP will contract by about 19.5%. That's over a 5% growth, but there is a fairly wide estimate. Some people expect it will contract only by 15%, but everyone, of course, expects a contraction. The gross value added, which is GDP minus taxes plus subsidies, that is also seen contracting by 19.2% compared to growth of 4.8 last year. The biggest category which will grow is agriculture. That is expected to grow by 4.8% over 3%. So basically, rural areas not affected by COVID, and it was a good Rabi harvest. The estimate for manufacturing is terrible. Minus 31.7 is the poll average. But look at the range. Some people expect even a minus 42% because for a better part there was no manufacturing for April and half of May. Trade hotels, again, it's even worse than manufacturing. Minus 36.7 is the 36.5 is the average. Some people are expecting even a minus 50% because hotels and even transport, a lot of trains, buses not running at all. And financial sector, it's not so bad. The average is minus 15.6, but some people expect only a minus 8% because banking and insurance could manage digitally. The public administration is the positive. This is all government services, and government spent more than it did a year ago. And therefore, public administration is expected to grow by 11.2% over and above 7.7% last year. Although only the quarterly number will be announced, we also took a poll for the full year, and there the expectation is that this year GDP will contract by 6.5%. But that's the average. There are some people who expect it to be as bad as minus 10% as well. Of course, these numbers will change once the quarterly numbers come. And if it's not as bad as 19, and a lot of people expect it could be just about 17 or 15, but it is still going to be a contraction.
Okay, and the worst GDP print since the start of when GDP was calculated way back in 1990. So brace yourself for some disappointment later in the evening. Let's take a quick break on that note. But up next, in a mega 24,000 crore deal, Reliance has acquired Future Retail's businesses. Key reactions on the deal lined up when we return.